If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's August 12, 2020. And today is Wednesday morning. So looking at the highlights of the day, the markets make a V reversal formation across the board. Now, these type of formations create fantastic trading opportunities. But first, let's take a look at the economic events of the day. So we have one event coming out later this afternoon from the United States, monthly core CPI number coming out. Looking at the various markets, we're watching the majors continue to retrace versus the US dollar, while the Dow Jones makes an about face, a tremendous V formation. We were just in a crazy volatility yesterday with the Dow Jones, the NASDAQ trading at the bottom of the range as well. Now looking at the indices, gold gives up $100. That V formation also happened there, while oil slides. And lastly, looking at the stocks, they give up the gains at the end of the trading day. It's kind of questioning of our previous rally, but time will tell. But first, let's take a look at the markets and see what we can expect from today's trading. So we're starting out with a weekly chart of the Euro USD, and pretty much you see that this 118.11-ish level is a bona fide resistant-ish level. Now we're taking a little bit of an about face, not as big about face I was anticipating, but this may continue into somewhere around the 115.55-ish level. That would be halfway point from our initial ascent onto this height of 118. So something to consider as this potentially can develop into this. Now looking at the GBP USD, looking at a weekly chart of the GBP USD, pretty much retracing as well, but not as wildly as the Euro USD. Right now trading a 130.43-ish level, but this may play catch up as it usually does. Now jumping into the South African Rand, okay, now we've been watching this very carefully. I think we're consolidating at this area, okay, 1761 the upper range and 1641 the lower range, which is 120 pips, which is a decent range to be trading with. But be careful as it's trading on this upper limit, because if it does break above 1770-ish level, we could see it maybe get back to the 18-ish level. I hope that's not the case as well. Now jumping into gold, look at this massive sell-off over the past couple of days. Starting out with the beginning of this week, we had a colossal sell-off from 2073 down to 1883. Now this is completely warranted, okay? We went up from 1746-ish level before this massive incline in the middle of June, okay, only 2 months ago, and we rallied all the way to 2000. Now I do expect a 50% retracement, and that hit it, okay, because we have this Fibonacci retracement already set up. You could see it quite clearly. 1867 was that retracement level. Now I do anticipate it's going to consolidate around this area, but if it does break about above 1918, 1920, then we could see it back into the high 1900 levels. Okay, so something to consider. This will be continuing to be volatile. Okay, but a beautiful retracement, a really great setup with a Fibonacci retracement, and this is why it's really great to set them up, because you see it bounced right off of that. Okay, you got to just have it relevant to the most current situation. That's why I didn't draw it from the low of March, okay, because this was fictitious since it was pandemically, okay, but since then I would say the bottom was 1662 and the high was 2072, so that's why I drew the Fibonacci at these levels. But jumping into the Dow Jones, okay, this was a massive V formation yesterday. Okay, this is a daily chart and you can't really see it here, but let's look at a 1 hour chart. Look at that. Okay, we hit this high of 28,000 yesterday, didn't break above it, and then boom, okay, sold off over 400 to 500 points at its peak. Okay, that's a massive decline in one day. You could see that you got the volume down here actually solidifying that this was a nice sell. So this may bounce, but it may find ourselves, correcting our massive trend line that we've had. Okay, as this is breaching that trend line as well. Okay, we're underneath both the 30-day and the 14-day moving average for sure. Okay, so something to consider. We may see that 30-day moving average as a potential resistance-ish level. So something to consider. Now, the stocks obviously sold off as well, but the NASDAQ stocks were the ones that took it off first. Okay, now NASDAQ is trading right now at 10,092, about 300 points over our all-time high. So I'm not saying that this is the end, okay, and that this is starting to be a bearish formation, but something to consider. I do believe that we'll be consolidating at these upper limits, and the stocks will be doing it as well. Okay, now if we look at the individual stocks, Apple trading at 435, down about 20 points from its high, but I do expect it to bounce, okay? I do expect some life here before it does hit this gap up, okay? Before that does hit that 430-ish level, okay? So I do expect that. So just keep that in mind as this develops. So looking at Facebook, also sold quite aggressively here at $253 a share as well, okay? What is interesting is that the stocks gave up their gains towards the end of the day. If we look at JP Morgan and if we look at a 30-minute chart, you see that it only gave it up at the end of the day. So it wasn't like as if, you know, it was something that, you know, that it just lacked follow through. And so when you lack follow through, then that's kind of like a bearish kind of sentiment. Okay, so something to consider to go into today. This obviously affected Bitcoin as well. Okay, hitting that snag at 11,600-ish level and just trading below that. Okay, so this is important because the next time this carries through, okay, in the upper area of this 11,627, it may actually push higher. Now, looking at the VIX, this is really important. You saw the VIX actually spike up yesterday. Okay, if we look at a 30-minute chart, you actually saw that towards the end of the day, the VIX actually taking off. And that's representative of the fact that the selling is a little bit more aggressive than what it was going up. So that's understandable, but it was furthermore interesting. If we look at the VIX, it hit that support level. If we look at a daily, there we go. That was that previous support level where I mentioned the other day, okay, where we had the gap up from the pandemic time, okay, and there you go. Okay, that's what we hit. If I draw a straight line, that's as straight as I can draw. 2175 was the low, and we perked above it. Okay, so that's indicative of the current situation, and I do believe we'll continue. If we do sell above the 2780, we can make a further breakout, okay, for the VIX. Okay, so something to consider and keep this on your radar because you can trade this also. So it's actually a really great tool to trade. This is Fred Razak. I want to wish everybody a great trading day. Thank you.